All right, it's my pleasure now to introduce our next speaker, our first speaker for this part of the stream. We've moved from risk now to agility. And our first speaker this afternoon is Jolie Hodson, CFO for Spark New Zealand, with an understanding of the critical role of the finance function in dynamic competitive markets and during a massive organisational transformation. And it certainly has been for Spark in the last few years. Jolie concentrates on developing clear insights into what customers themselves actually value, what makes the business more competitive, and what delivers value for Spark New Zealand. Jolie is responsible for finance, strategy, taxation, treasury, group risk and internal audit, as well as the Skinny Mobile and Big Pipe broadband businesses. Her switch into the telco space was quite a dramatic move from her previous role. She'd previously worked for 12 years with Lion Nathan in a range of senior financial roles. Most recently, she was finance director for Lion's Beer, Spirits and Wine Australia division based in Sydney. And before joining Lion in 2000, she spent 8 years with Deloitte's audit division in Auckland. So to address us now on driving business transformation in rapidly evolving markets, please welcome Jolie Hodson. Thanks, Andrew.
So good afternoon, everyone. I'm Jolie, as just described, and I'm here to talk to you about the turnaround story that we've had at Spark. And that's been a journey we've been on for the last 3 years. And I think the fact that you guys are in the room here today and you're thinking about how your business is going to be disrupted over the next 3-5 years is really critical, because I think whether you're CFO, finance manager, or a business leader generally, you need to be thinking about how are the forces around you and the risks that we're seeing in the marketplace going to impact your business in the next 3 years. So I'm going to share with you our experience, so the ongoing disruption we're seeing in the world, and I think you've heard a bit about that this morning too with discussion around Pandora and a few of the other sessions. I'm going to talk to you about how we shaped the turnaround journey at Spark, and we've been on that journey for 3 years. We're by no means finished, so I wouldn't want to hold out that we are. There's still lots to do, but we have learned some things along the way, and I want to really share those learnings with you. I want to give you a sense too of potential future that we see for New Zealand. So before I get into our story, let's have a look at what's been happening in the world over the last few years. So we're living in a world where the forces in the marketplace are quite violent. You're seeing geometric growth in data and digital information. And what we've learned in the last 3 years provides some good context. But it by no means will predict what will happen in the next 3 to 5 years in the future, because those changes are so profound. And what we're seeing is disruption can be modest. So you can have a company that is merely have its salespeople are disrupted by online sales, or you could see something much more major with a big disruption in the whole business model. And all of us will be affected by business to business or business to consumer, digitisation, disintermediation or disruption. The new breed of companies are growing fast. So let's just take a look at those and consider their influence. So the world's largest taxi company, an Uber, owns no vehicles. The world's largest media business, in Facebook, owns no content. The largest accommodation owner, an Airbnb, has no real estate. And the largest telco provider owns no infrastructure in Skype. So what we can see is this massive disruption of industries by digital businesses. And that digital marketplace will be the new glue. And really what the difference in this marketplace is the customer experience. So how you connect supply and experience for the customer. And it's rapidly becoming more valuable than the assets. So those of you with teenagers would understand this. So why do you need to own a record collection when you can stream any piece of music onto your phone at any point in time? Well, you just don't. So you're seeing whole industries being disrupted. And what we find with the digital companies is they invariably are very thin layers that sit on assets and sit on businesses that have all the cost. And these digital businesses will connect with the customers who have all the money. So worse still, you can bet that behind these entities, there's another 50 rapidly gaining customer prominence within New Zealand. And what they'll be doing is increasingly taking revenue from your business potentially to theirs, but also increasingly lifting the expectation of customers around the experience they expect to have. no matter what category you're in. So when we think about the disruptive forces, these are some of the things that we're considering. So if you look at technology, it's rapidly evolving. You've got the growth in sensors, mobile, cloud, fibre, all leading to greater amounts of personal data being shared across networks and information, so that digitisation of information. You've got the global reach of businesses like Facebook, Google, and YouTube, and you see them disrupting more and more categories. Customer power is shifting. The influence of social media means that customers want to know more about your business. It's very clear when something's gone wrong in your business. It's up on Facebook or in the media almost immediately. So the expectation of you as organisations is much greater. We're seeing expanded development resources. So what I mean by that is there's approximately 25 million app developers across the world, around 10,000 in New Zealand. And all of them are thinking about how do they solve customer problems and potentially bypass you. You're seeing a lot more new entrants entering markets because the barriers to entry that used to be more around assets and ownership of those assets are slowly falling away as it shifts to experience. You're seeing existing companies shift into adjacencies. So we've done that ourselves. If you look at media, we've moved into internet TV. So we're looking at different ways of growing revenues, and we're considering different profit pools to what we previously did. So the chances, if you're not adapting to this new digital world, you could be bypassed. Finally, one of those forces we see is that digital divide. Now that used to describe the difference between those who had access to communication and modern technology versus those that didn't. I think more and more that's coming about being the difference between those who are disrupting and those who are being disrupted. And I guess we all have a choice, stark choice as leaders, to make that decision. Do we want to be disrupted or do we want to be the disruptor? So 3 years ago, we started our disruption journey and we transformed our business over that time to adapt to the fast evolving marketplaces that we're operating in. And I think for us, as I said, it started 3 years ago. We took stock of where we were and where we needed to be. We had scale, we had solid capabilities. We were operating in marketplaces where we actually had enormous growth in data. And CEOs were saying that technology was one of the number one competitive advantage points they saw. But on the downside, we also had pretty intense competition. We had a tired brand. We had a tired brand. We were losing market share. Our people's morale was low. The returns were lower, and we were also seeing shareholder confidence was low. So there was a lot to do. But you can see for telecommunications company, in the new digital world, the actual opportunity there is immense. So what this chart tries to show off to your left-hand side is really the exponential opportunity for telcos to become the platforms of the future businesses in terms of connecting both homes, transport, cities, healthcare, entertainment and energy. So that provided a big opportunity for us to consider how did we want to be in a new world. So our board gave us a mandate to change, and we started with a series of beliefs. So the first belief is we believe that every New Zealander and every New Zealand business has incredible potential. We believe that the easy access to technology is part of unleashing that potential for New Zealand. We believe we need to actually adopt the technologies much faster than we already are. And we also believe that Spark had a role to play in doing that because we are fundamentally a New Zealand organisation. We're focused on this market. Our success is tied to New Zealand business success. So that was a critical part about how we set our belief set for making that journey into a new digital world. So we started disrupting ourselves. We began with a series of parallel interventions or disruptions. So we looked at the pricing of our products, the types of products we were in. We made choices about the assets that we wanted to have and the investments we were going to make. We also pushed hard on cost efficiencies and capital management. We took more risk on new ventures, and we changed the nature of our workforce, bringing different capabilities and reducing layers. The real question was, how do we turn all of these actions into the customer preference and commercial success? So 3 years ago, we created a simple plan on a page, and this is this plan on the page here. And our ambition hasn't really changed over that 3 years. So we want to be a winning business, inspired by our customers to unleash that potential in all New Zealanders. It's a lofty goal, but one I think we are very capable of achieving by being the most valued brand in the home for our consumers, and also for best partner to business. So we're now moving into phase 2 of our strategy. We'll be taking advantage of the opportunities that we've actually been able to unlock through the first part of this strategy, so the increased revenue and the focus on continued cost out. So before I get into what our learnings are, I want to talk about where we actually are today as a business, because we've changed probably more than you would think. So we've shifted from being that traditional infrastructure owner who was walking backwards slowly, ceding market share, holding prices high, and really defending a legacy business, to one that is winning in the marketplace, was prepared to invest in price to change its competitive stance. And over that time, what you've seen is we've gone from a mobile market share of 34% to 42%. We've grown our cloud business at a rate of sort of 3 times the market. Our earnings have gone to positive for the first time in 10 years. And earnings growth, not earnings. That'd be a bit frightening, wouldn't it, if our earnings had only gone there? And we've seen our market cap grow $2 billion since the change in strategy. So we're now number 2 on the NZX, and we've got our eyes on Auckland Airport at number 1. So watch out, we're coming. And brand preference has been improving. We've also improved the organisational health of the business. So they've all been fundamental pieces of the puzzle that we've put together in terms of this change journey. We've also simplified our business and invested in platforms to help us produce new products but at materially lower costs. And we made a conscious decision to change our portfolio as well, to exit out of offshore businesses and to really bring that focus back to New Zealand and a New Zealand market only. And we've shifted our culture. Throughout this change, we've really shifted that culture to being a winning business with an owner's mindset. And put simply, that owner's mindset is thinking about every dollar as your own. So what's the cost of delay? And that was really important for us to teach our people that, and to make sure that as a leadership team, we were acting with that same modus operandi. And when you say it all fast, it sounds easy, but actually it's not. It's been pretty tough. Facing the real truth about how we're performing is hard. Nobody likes to be told their baby's ugly. You know, that's the last thing you want to hear. But you've actually got to do that. You've actually got to look in the mirror and say, what do we need to change? We had to make some tough calls to reduce the number of people. We went from a business that was just over 8,000 people to one that's just over 5,000 now. Now that included divestments as well, but it did include quite significant restructure. And we were conscious of the impact we had on people as we went through that process. We had to take risks in terms of entering new markets and being prepared to fail. Because that's one of the other things. You have to be prepared to enter, to adjust quickly, because in the new digital marketplaces, things are evolving so fast around you that you can't afford to just stick on one solid line and ignore what is changing. You have to be able to shift, and you've seen that recently with our media strategy. We increased the pace of decision making, so we freed the business up, and we were prepared to take more risk in doing that. And initially we were criticised by the disbelievers, both internally and externally, whether that was the rebrand or whether that was sort of discussions around what did we want to be, getting back into revenue growth, a business that had been going backwards for 10 years. But slowly, as we've delivered against each of those promises, we've seen that belief build. And we'd say that transformation is exceeding. Our latest results were released just a few weeks ago, and within that, we're seeing a big increase in the number of customers choosing Spark. Investor confidence is growing. We returned to EBITDA growth back in FY15, and that's been reiterated in the first half of this year. We're nearing number 1 in the all-important mobile market, and our platform IT is growing. We've got a ventures model that helps us invest in new parts of the business and take greater risk, and that's put new products into market, whether that's disrupting our own business, so Skinny Mobile or Big Pipe, and we've entered other adjacencies, whether that's home security, like Morepork, or whether that is media in terms of Lightbox. Through that period, we've been able to generate a lot of free cash. So now I just want to spend some time on some of the learnings that we had from that. So if you're going to want to transition your business and make changes like that, you have to free up the cash to invest in the future. No one's going to give you a free hit. No shareholders are going to say to you, well, that's okay, you spend the next 3 years doing that, we'll be prepared to take a much lower return. They're just not. So really the emphasis on you as a business is really to think about how do you generate that free cash. For us, it constituted two key things. The first one was a program called Turnaround, and that really focused on our operating model, all the operating expenses, how we organised ourselves as a business, and it was a centralised program. We got some guys in from the US, so people who are used to Chapter 11 bankruptcies. So people where cash is very critical and they have a much higher cadence. You can see on the left-hand side of that slide the owner's mindset. So all about cash is king, acting now, accountability, so really freeing people up to make calls and being backed to take those risks, ability to challenge with respect, and clear decisions and outcomes. So when people have brought stuff to us as a leadership team, we have to make a decision. We have to free up the business to move on that, because for every day and every week you delay, there's a cash cost to doing that. So we were able to generate 350 million of exit run rates, so basically that's recurring cash flow savings over time. We're also able to generate another 650 million on the back of disposal of assets that we saw as no longer core to our business or our future in New Zealand in terms of that strategy. And mainly that was around AEPT in Australia, some of our international voice businesses. So that gave us $1 billion to really help think about how were we going to change and invest in the future. We also realised we had to get much closer to the customer, because if you think about digital businesses, experience is critical. And we knew that we hadn't been as close as we should have been. So this is our CEO, Simon, and one of our customers, gaming in their home, trying to understand what was important to them as customers, what did they value, and more importantly, what would they pay for. And it helped us build a much deeper understanding of what we needed to do to shift our business. It also helped us think about our brand. We wanted to grow high brand preference and relevance. And that was one of the items that contributed us shifting to our Spark brand from Telecom. We've still got a way to go on that customer experience, there's no doubt, but we see that as a critical element of any change when you think about what's required to operate in a digital marketplace. So the $1 billion we freed up from the operating savings and the divestments, we used to over-invest in foundations for the future. So we had to take some risk. And what we did is we invested both in our IT stack so that we improved our customer service. So that was a 3-year program, investing probably the best part of 250 million in getting our organisation to a place that we could actually more easily connect with our customers and create greater experiences for them online. We also invested in our data centres. So that was really about supporting our cloud business and infrastructure as a service. And we invested in mobile spectrum. So really creating that great mobile network across the country. We also decided to buy some businesses that would help us grow in the fast-growing segments of the market. So if we looked at cloud, that was one area we really focused on. So we acquired Rivera, CCL, and AppServe. We've also done a few other smaller ones. So it was really about shifting the business from investments of the past and reallocating assets and resources to investments of the future. We also needed to take into new markets and take risks and learn. And for us, that was really the creation of our Spark Ventures business unit. So what that meant is that, when we were Telecom, every move we made was often scrutinised, and any sniff of imperfection was considered a failing. So what we had to get comfortable with is setting up a unit that sat outside our core business, that was really comfortable to take that risk, to build products in a digital model, to actually operate in that more agile, team-based approach that helped us try some things. And in doing that, we protected that venture. If we'd left it in the core, we probably would have, the risk would have been that it had been overcome by the bigger parts of the business. So this was really about giving it fire cover, giving it funding, but by no means we were being cavalier with shareholders' money. We're very clear around what we needed to achieve in each of those businesses and the metrics we would look at, and we had to adapt quickly if we saw some products not working or not working as well as we wanted to, or the market around us evolving faster than we thought. So I think that's a really critical one for you to think about in your organisation, is how do you actually create that opportunity for some of these businesses to either thrive when they're smaller than your core business, or to try some things in a low-risk environment. And this one here, the Reinvent HR performance, so that was probably, if I think back to the start of our journey, that was one of the most fundamental shifts we made. So we went from a business that was very slow, we spent months on performance reviews, and I'd argue perhaps didn't get the quality that you'd expect out of that. So what we did is threw away the book on that. We pretty much reinvented that. We went to adult conversations. We thought about what kind of organisation do we need to be in 3 years' time, and we started with a clean piece of paper. So I'll give you an example. Our HR function, maybe we were spending 10 million on it 3 years ago. We knew that we'd probably need to spend 4 million in 3 years. So if you knew that, how would you design and what would you do? Takes it away from everything you're doing currently. It makes you think carefully about what's important in terms of the services you're offering, because there has to be choice. You can't do everything the same. And that was one of the big changes for us. We also removed the layers, or more of the layers that had slowed the organisation down. We created greater accountability for our people, and we invested in building what we'd call the fundamentals of management in terms of for our leaders. We had an expectation that all of our people should be led by great people, and we needed to invest in building their capability. And if we couldn't build that capability, then we need to make some different choices. So that was one of the big changes, and I think that's the one that's often avoided. It's a bit hard. People don't want to have a go at that. But I think fundamentally, if I was to have my time again, that is definitely the one that would be the first cab off the rank for me, because I think you've got to remember, when you're trying to transition a business and the plane's up in the air and you're trying to take out engines, the quicker you get your people to what the end game looks like in the best way that you can, the more effective they will be in them focusing on the goals in terms of delivering what we need to in the marketplace. The longer you leave ambiguity there and the longer you leave stress there, the harder that becomes. And it also builds a culture of people understanding that change will be a constant, because it will be in the next 3-5 years. It's not going to stop. So I think being brave in HR is really quite an important part of that change journey. The other thing I think is important to remember is you've got to communicate your change story often to your board, to investors, to the media, to the analysts that follow your business. You've got to share with them the choices you're making. Why is that? What risks are you looking to offset? Why are you allocating resources here rather than to legacy parts of the business, for example? What are the new ventures and what do you see the opportunity for them? And I think you can't underestimate the importance of that. It's also your people. You want them to constantly understand why you're making the choices that you're doing. And I think there's a recent letter from the CEO of BlackRock, which is an asset management fund, so 4.5 trillion, I think, funds under management. Their CEO, Larry Fink, sent a note, and he said to all the CEOs that they have investments in, basically saying, you comment about investors being short-term, but as CEOs, you have to lay out to us more about what's happening in your strategy, what's the ecosystem, what's the challenges you're seeing in your business, both in markets but also in technology and change. And that was quite an important part, a good reflection in terms of how you think about your change story. When you're living it every day, you think everyone should know it. But you've got to remember, you go 2-3 steps away and people aren't seeing it as clearly. So you've got to spend the time to share that story more regularly. I think the other thing we learnt is, and we used Spark Ventures to do this in the first place, that to be a good digital transformation, you have to live it across your business. So we started that learning, and our ventures team, we gave them the opportunity to be able to create products in that new way of working. We gave them, as I said before, the air cover to do that. And what they adopted was 7 principles. Now, this is a McKinsey view of the world, but we think it's pretty accurate from what we're experiencing. So you've got to set ambitions that are unreasonably aspirational. Be obsessed with the customer. So this whole concept about customer experience being the most critical element of what you're delivering in this digital world. You've got to challenge everything, including the CEO, and we've seen that team do that and do it well. You've got to follow the money. What will customers pay for? If you're going to invest in these new businesses, you've got to be clear about where value will end up. And sometimes that's hard. Let's face it, these markets are moving so quickly, you know, media or any of those types of markets. Where will that money end up and how do you get a share of that? You've got to bring in new capabilities. You've got to bring digital leaders into the business because they need to be able to teach people within the teams how to think about and operate in this new world. But you've also got to ring-fence that culture and talent. What you can't have is that dissipated. So we did that through ventures, and I think we've found that to be really effective. And now we're bringing it across into our broader business. We've seen it work, and we're using that to help inform how we think about almost everything in our broader business in terms of how we operate, how we design, how we sell, how we market. I think the last thing about these 7 traits is that you've got to be quick because the market's moving so fast around you, and data is so much more important in these marketplaces. Really understanding what's happening, leveraging all the data around you in terms of what your customers are doing and your competitors is really important. And finally, when I talked about our beliefs, nothing over the 3-year journey has really suggested to me that any of those beliefs are untrue. Effectively, our belief that all New Zealanders and all New Zealand businesses have incredible potential, that easy access to technology is the most critical factor of that potential being realised, that to keep up with the world we have to increase the pace of the adoption of that technology, and that Spark has a role to play in leading that change. And I think if you think about New Zealand, there's an enormous opportunity in front of us as we look ahead. The digital technology can help, if you think about health, transport, the environment, all of those areas. Is what's happened over the last 3 years across the whole industry has been a big investment in fibre and the networks. So all of the tools that are there have been invested already and there to unleash the opportunity. I think there's massive potential for New Zealand as a result of that. And I feel like we're walking the walk on this. We're really invested in this future, and we really want to see New Zealand businesses also take up this gambit. And now I just want to give you one view of potentially what a digital future could actually look like. This is our view, and we think this is within a period of 5 years' time. It's not the only view, I'm sure, about what's out there, but just like you to watch this. we needed somebody to lean on. So thank you, everyone. I think that gives you a bit of a view of what One World could be like in the, within the next 5 years. Happy to take any questions now.
Thanks, Jolie. Gosh, you wouldn't want to have any network outages if we were that connected, would you? No. Fantastic video presentation, really gave us a taste of sort of where things are heading to. One question before I take some questions from the floor was I facilitated a discussion recently, the Telecommunication Users Forum. Simon talked about the role that Spark was doing in terms of working with customers directly to actually support them on this journey. That's an interesting approach for Spark to see itself much more, not just as a provider, but almost moving into a consultancy role of how you help businesses through this. How much is that now becoming a core focus for the business?
I think if you think about the discussion we had around customer experience and how do you improve that for customers, you've got that on one side in your market, but in business, it's that same thing, helping people understand what is out there, because technology is moving so quickly. How do you best get your business to where it needs to be? And so spending time sharing that, and it's sort of more of an investment up front, really, to get the right outcomes.
Sure. Questions? Questions from the floor? Here's your chance. Leading digital company. Well, what's been the challenge? I guess you mentioned you started with HR. That was an interesting point about starting with that.
Yeah.
What else?
I think of the challenges when you are running a program as wide and you're trying to shift a business as much as we were. There are a number of balls to keep in the air at any point in time. We not only were shifting the products and the processes, but we're changing our IT stack. We were fundamentally changing the numbers of people we had in the organisation. We were divesting businesses. We were entering new markets. So keeping all of those things operating and people clear about what their role in that is a really critical part of that. So I think that's the challenge, but that's what means that you can execute at pace. Actually being clear about what you're trying to achieve, the plan on the page helps you do that. Gets really clear on prioritisation and choices. So I think that's how we kept all of those balls in the air.
And what about in terms of your own role as CFO? Where you were focusing, say, 3 or 4 years ago, where's your focus increasingly shifting towards in your own role?
As a CFO, your focus has to be on what's happening, and you've got a component of running the business as it is today, but you've constantly got to have an eye on what's happening in the future. Because we talked about, and I think you've heard all morning about the changes around us, the disruption that's occurring. So your role is really to bring those pieces together to help guide the business on where does growth come from? What do we fundamentally have to shift in our current business environment if we want to achieve that? And I think it also, the performance cadence is an important part of the CFO role, making sure that performance management is moving at pace, you're making decisions, you're enabling the business to get on with what it needs to do. And that starts with clarity. I think, as I said, that strategy on the page. So.
And as an organisation that obviously is probably, in the autobahn lane equivalent of business, because, as a digital tech company, you're expected to be right at the forefront of all of this. Where does that create sort of pressures in the organisation?
Well, you've got to make choices. You hear before you've got the first sort of next G rolled out in terms of mobile, the next one's on the path. So choices around technology, what you invest in, how you balance the level of investment you make. So that's some of the challenges we face, but that's part of being open and looking outside, seeing what's happening around. We're not the only country going through this, we're not the only business going through this, so we try and spend a lot of time outside our business as well, trying to understand what are those big trends, how can we best enable both our own business, but New Zealand businesses more importantly, to be on the right side of those trends.
And agility is often mentioned as the the guiding principle for everything. When you think of your role as a CFO, how do you build agile into your
I think being
area?
agile is really being about prepared to take some risk and to back your judgment. I think what slows down an organisation is analysis, sort of paralysis, going over things again and again, not making a call, being clear about why you've chosen to allocate resources to a certain place, and then moving on. You know, have the debate, have the constructive debate in the room, but then once you've made a decision, you've got to commit and shift.
So you've just got to be fast.
I think you do. I mean, that's not saying you're not considered. It just means you don't extend out the conversation for much longer than it needs to be. That's the difference, I think.
Excellent. Thank you very much for joining us. Please thank Jolie for the presentation. Thank you.